According to Jim Rogers, commodities get no respect. Many investors don't like commodities because they are boring and often volatile. But commodities are the most important things in our society. They are stuff, the stuff all things are made from. They are the basics. In his 250 pages book published in 2004, Hot Commodities: How Anyone Can Invest Profitably in the World's Best Market, Jim Rogers introduced the novice to the basics of investing in commodities, as well as explain what they are and why they are important. In doing so, he shatters some myths about the relative risk of commodities, explains the relationship between the stock and commodities markets, and provides a brief analysis and history of the global oil, gold, lead, sugar, and coffee markets. Born on October 19, 1942, after growing up in Demopolis, Alabama, Rogers won a scholarship to Yale. Upon graduation, he attended Balliol College at Oxford. Jim Rogers learned about commodities by himself while doing his high finance career at New York in 1968. When bear market occurred in 1970 with the end for stocks, Jim Rogers found many opportunity in commodities as he bought value on the cheap for any undervalued asset, mostly commodities.
Hello, good afternoon. I'm Meutia Prima from Fantastic Four. Today we will discuss and review a very interesting book by Jim Rogers with the title Hot Commodities: How Anyone Can Invest Profitably in the World's Best Market. And joining me today in the discussion, I would like to say hello to Femin Puspitasari in New York. Hello. Leli Mulyani in Tokyo. Hi. M.Rusdy Sanny in Singapore. Hello. And Santika Budhi Utami in Hong Kong.
Hello, Meutia. Good afternoon.
Hello guys. Thanks for joining me today in today's discussion. So I think you all guys agree with me that Jim Rogers' Hot Commodities is enjoyable read. It is interesting that in this book introduction, Rogers said that commodities get no respect. Femin, what you say?
Well, let me put what Jim Rogers taught in this book this way. A lot of people mistakenly believe that commodities are very risky and that investors usually lose their shirts. Jim Rogers shows in his book that this is not the case, and that commodities and stock just follow different cycles. He explained what causes commodity price to rise and fall, how a few different commodities have behaved in the past, and how they are likely to behave in the future.
So it means commodities has been underestimated. Leli, you have another thought on this?
Not by Jim Rogers. There are a few reasons why he thinks commodities should get respect. They are easier to comprehend and study than stock, and behave more rationally since they are subject to the basic law of supply and demand. They have outperformed many other investment options in recent years. It is foolish to ignore an entire sector of the marketplace, and a bull market is currently underway in commodity, a trend that Rogers expects to last for at least a decade longer. Further, Rogers believes that you cannot be a successful investor in stock, bonds, or currency without an understanding of commodity.
Okay. So before we go into a deeper discussion in each chapter of his book, just for a brief highlight, Rusdi and Santika, what readers could expect from this book?
In this book, Jim Rogers shares some of his stories and explains how the future markets work for commodities. Rogers also offers practical advice and information for beginners, including the best resources, how to read the commodities reports in the newspaper and on television, the various ways to open an account, information on index funds, mechanism, terminology, and other vital details people must know before investing.
Jim Rogers also explained his strategy and explained how anyone can invest if they are willing to work for it. He doesn't guarantee you will get rich quick, and he claimed over and over he is not a market tamer. He say he is the world most trader. Instead, his approach is to pick commodity he likes and research until he finds trends. Then he jump on as the trend move up and hop off before he think the trend will turn around. Reader will find this book is clearly written and entertaining. Hot Commodity offer a solid introduction to investment.
Alright, okay, we'll be right back after the break. Why invest in commodities? Rogers thinks that all investors should understand commodities as they serve as a hedge against a bear stock market. This is because commodities and stocks are negatively correlated. Commodities in bull run while stocks in bear run. The central issue of what makes commodities price go up or down is due to the law of supply and demand. Demand higher than supply means higher prices.
Yes, this is the highlight in chapter 1 of the book. While speaking about inflation, commodity return outpace inflation. Inflation caused by supply and demand imbalance that will be pushing up commodities price. Commodity price can rise even when economy is stuck in reverse.
When will the bull run end? And what does it mean to commodities?
Even in a long bull run in commodities, expect periodic corrections from time to time. In the coming years, China will be influential to the world. If China's demand for commodities drops, prices will tumble. Such setbacks are actually good buying opportunities.
In chapter 2, Roger said bull market of commodity lasts so long. When supply of things are allowed to deplete it without increasing new capacity, it takes time to recognize the change, much less to get production up to the point where it can meet demand. So, if there are concern about missing out commodity bull market that had lasted for several years, looks like there are still plenty of time left and money to be earned from commodity investment.
Author Jim Rogers has a good point. It doesn't make sense to ignore a world asset class, particularly commodity, one that has done quite well over time. Contrary to all the myth about how risky, volatile, complex, and downright dangerous putting money in commodity is supposed to be. The key message that the author wishes to impress in the chapter 2 of this book is commodities need not be any more risky than investing in the stock market.
Chapter 3 and 4 provide the nuts and bolts of investing in commodities. Roger begins chapter 3 with a discussion on the importance of psychology to successful investing. Leli, any thought?
Yes. In this chapter, Rogers encourages the reader to know yourself before putting any money on the table and stress the importance of this self-knowledge. He also encourages the reader to be selective in the commodity they wish to invest in and to learn everything they can about them. We can use information about past trend, current inventory, the future supplies for previous years, and overestimates for the upcoming month, including detailed historical chart, along with special features analyzing various commodities and also the price trend. In terms of demand, we have to answer the question about the commodity most used for, the continuity of demand, alternatives to replace commodity if the price go too high, and also new technological advancement requires.
In unregulated market like commodities, strange things are always happening, and volatility is quite normal. Such fluctuation in price creates considerable financial risks for those businesses that depend on buying and selling commodities. Rogers' rule of thumb for shorting. I don't like to sell something short unless it's unbelievably expensive. Okay, the discussion is getting more exciting. We'll be right back after this break. We particularly enjoyed Chapter 5, which is basically devoted to China. Rogers recounts his many trips there from 1984 through 2006 and how China has transformed into a world economic power during this time. By delving into topics such as Chinese history, the economy, the currency, a comparison between China and India, and a look at the upside and downside of China's growth, Roger leaves no doubt in the reader's mind that the 21st century belongs to China and that their demand for commodities will not go away anytime soon. Santika, how do you see the rise of the red capitalism, as Roger said in the book?
China is growing at an exponential rate and demand a lot of commodity to fuel its growth. As the standard of living improves in China, 1.3 billion people are going to consume many more products and resources. At the time of writing, China is the #1 consumer of copper, steel, iron ore, and soybean, #2 of customer of oil and energy products. When China stumbles, it will be momentary and hence it will pose as a good opportunity to invest in commodity at low prices.
So, Rusdy, what can expect in the next 5 chapters of this book?
In the book, he does a beautiful job at telling us about political and other developments that affect commodities. He uses oil, gold, lead, sugar, and coffee as examples. An in-depth look of those 5 particular commodities is covered in the next 5 chapters. Here, Roger discusses why these 5 commodities should hold a special interest for budding commodity investor, covering issues such as supply, demand, and prices, alternatives to these commodities were available, the changing nature of these commodities markets, the outlook for them.
So, what lesson and takeaways can the readers get from this book, guys?
The concept of demand and supply and how it affects the commodity market is something that every investor should keep in mind. The book primarily deals with how the price of various commodity risks in the future market have changed historically.
In his book, Roger advises playing the market for the long term, but he doesn't explain the mechanic of rolling position forward, market timing, or finding information about individual market. However, the book is a sales document, not a manual. His analysis of the various commodities did open our eyes.
For me, although sometimes the book seems to be selling Roger's own investment advice, it's hard to argue that the logic he uses to construct his arguments. The trick is to check out his theories and figure out when and how to get into the markets. Okay, ladies and gentlemen, once again, thank you for joining me in this discussion. I really appreciate your opinion and review on Jim Rogers' Hot Commodities. Best of luck for you all. And I'll be seeing you again on another hot topic in Hot Talks from Fantastic Four. Have a great day.